Today, we're going to talk about inheritance tax. What is it, the size of it, and how to plan for it. When we talk about inheritance tax, how big is this problem? Last year, 4.6 billion was paid to HMRC. It's not a problem that's going away. We're now looking that by 2020, 1 in 10 estates could be charged inheritance tax. There are some really simple ways that we can go about fixing inheritance tax. You can give it away, so gifts to people is fine. There are some allowances that you have to be careful of, but you could just give them the money. You could give money to charity, spend it. Spending it, enjoy that cruise, buy children a home, whatever it is you want to do, or ultimately plan for it. There are some structures that I'd like to go on to talk about. They fall into two camps: give the money away in 7 years, or give the money away in 2 years. When we look at 7 years, there is a compromise. You're either giving away the capital or you're giving away the income. There has to be something that you give up in that process. The two main structures that we use when we look at giving money away in 7 years, one is called a discounted gift trust. You get to keep access to the income for the rest of your days. You give the capital away, but there is a discount that's given depending on how old you are, which gives you an immediate saving to inheritance tax. The other structure that we look at, you end up with a range of policies, each one maturing 1 year after the other, and you get to decide every year, do I want the money or do I not? Policy rolls to the bottom. After 7 years, whichever structure you use, the capital is outside of your estate. So 2 years sounds really great. What's the catch? You're going to have to use some pretty high-risk products to get the money out of your estate in that 2 year period. That means you're either going to be looking at smaller companies listed on the alternative investment market, or you're going to be looking at something like an EIS investment, which again is single company investing. Both ways, pretty high risk, but it does achieve capital outside the estate in 2 years. The biggest single issue that we find when talking to clients about inheritance tax planning is the value of the main residence. Now, you can't give the main residence away and still live in it without paying a fair market rent to your children. I haven't, though, in my time found any parents that are willing to pay rent to their children. So when we look at the main residence, the government have looked to do something about this. So from April 17, they're going to bring in something called a property nil rate band. That goes up in 3 chunks by £25,000 between 17 and April 2020, which will allow more of the property to be given away to your direct descendants. So let's summarise what we've covered: how big the problem is, how to solve it in 7 years, how to solve it in 2 years, and what you can potentially do to solve some of the main residence problem. I hope you found this useful. To know more, please look at our website, where there's a guide you can download to saving inheritance tax, or to get in touch.